you from Mumbai and New Delhi, but all the action is actually unfolding in Karnataka. A cliffhanger of an election result that has had the markets jittery since yesterday. That plus the rupee, which has nosedived to a 17-month low on the rising US dollar, surging crude oil prices. So plenty to talk about with Alastair, the co-founder and director at Alavan Business Advisory. Good afternoon, Alastair. Always a pleasure chatting with you. Let me first begin with the big domestic trigger for our markets that we've been following very closely, the election result in Karnataka. Will Narendra Modi, the Prime Minister, come good on his promise and form the government? He certainly promised that to the people of the state yesterday, which is what the markets want. It indicates a continuity in reforms, else a fear of populism creeping in. Have I got that right? Is that the consensus?
Well, I think, to be quite honest, that markets are probably getting a little bit too concerned about this. One way or the other, to go back to your introductory remarks, the BJP does get the last laugh in Karnataka. The opinion polls said they weren't going to do anything like as well as they did. Although they've not won an outright majority, they have effectively reduced the Congress party to second place in a state which was Congress's last major state of governance. So even if Congress manages to retain the position in government, this is, I think, a defeat for Congress and a clear victory for BJP, irrespective of where the governor comes down. I also think in particular, it's a big win for Narendra Modi. Once again, he has proved himself to be a formidable election campaigner. And although Rahul Gandhi, by all accounts, fought a very respectable campaign himself, it was clear that Congress did not campaign this election well. It does look to be in a mess. And at the moment, it does not look like it's going to pose anything remotely resembling a real threat to BJP's governance in New Delhi come the general election next year. So overall, good news for BJP, irrespective of what the actual outcome is in terms of governance of Karnataka.
Alastair, if you look at the Indian markets, and they've been very directionless of late. Maybe some stock-specific action reacting to earnings, but very directionless. Maybe because there have been global cues at play, and it's almost as if all the market participants have assumed that yes, Narendra Modi is here to stay. So even that factor is not being priced in. Would I be right in that reading? And then after that, we'll get to the rupee, etc.
I think you're probably right about that. I do think markets need to be a little bit cautious, though. There is a lot of historic evidence to suggest that regional elections taking place in the 2 years before a general election are usually a pretty good indicator of how the general election is going to turn out. But let's keep in mind a couple of things here. First of all, notwithstanding what I said earlier, Congress did actually win the popular vote over BJP. In Karnataka, which again, I think underlines how misguided a lot of Congress's actual campaigning was relative to BJP's much tighter focus. Secondly, I think the elections, as far as state elections are concerned, which are really going to tell us about the likely outcome of the general election, are the state elections which are taking place at the end of this year, of course, particularly in Rajasthan. So I think any judgment today about 2019 needs to be cautious, just as it needed to be after the Gujarat state election at the end of last year, where BJP managed to hold on despite India's propensity for anti-incumbency. External factors, certainly. Dollar strengthening, clearly on an up curve at the moment, taken a lot of investors by surprise. A lot were predicting continuing dollar weakness. We're now seeing that going into reverse. That may or may not last. I'm not a currency expert. As far as the oil market is concerned, as I've said on several occasions recently, there are risks skewed to both sides of the current oil price. A trade war would certainly push it lower. Events in the Middle East, what I've referred to as the POTUS premium after the President of the United States. After all, Trump is driving this, even though he chooses to blame OPEC. The POTUS premium skewed to the upside on the current price. My personal view is that oil is more likely to go higher than lower for the rest of this year. And clearly that is going to have an impact on sentiment over India.
I also just wanted to get a sense that you think markets this year entirely in India would be very volatile, considering the run up to 2019 and before that a lot of state elections, news around it. You think that's something which will keep markets very volatile?
Volatility is back this year. We've all seen that. And although markets have broadly calmed down a little over the last 5 or 6 weeks or so relative to some of the action we've seen earlier in this year, I do think that politics, both international and domestic, are going to be significant drivers of renewed volatility periodically during the course of this year. If anything, I think volatility is likely to increase. And this is particularly important, though, in the context of yesterday's election result, because some reassurance to investors about India and about India's governance prospects in the medium term at a time when sentiment over emerging markets is softening, dollar is strengthening, which is usually not good news for emerging markets. I think some domestic reassurance, which is built into this result, as I said earlier, irrespective of what happens over who finishes up governing Karnataka, is actually a good thing for India at this stage.
Right. Also, when we talk about global markets, what's happening over there, dollar strengthening, crude continuously going up, irrespective of the earnings recovery, Indian markets would be fragile and volatile?
Well, certainly, I think rising crude prices are not good news for India. We understand that is a fact, but it's also something which does impact on market sentiment. I would urge all investors to continue to focus on India's fundamentals, both political and economic, and not to get too distracted by external events. Clearly, you can't ignore them. But in the end, I think it's important to keep in mind that oil aside, India is probably more immune to exogenous factors driven notably by the Trump presidency than most emerging markets. And if we do see a general slump in EM-related sentiment, which I think is certainly possible in the coming weeks and months, I think India will still stand out as a much better bet in the emerging market family than a lot of countries. And I'm not just thinking about the obvious two, Turkey and Argentina. I'm thinking about emerging markets collectively and as a whole.
Alastair, I'm back here. You've already indicated that that India may be insulated from a lot of the global external factors at play, perhaps one of the better emerging markets out there. But, what about FIIs? Do you suspect that we're going to see a reallocation of portfolios towards emerging markets, especially when commodity markets are in an upcycle? We've already been seeing brokerage reports from global influential brokerage firms indicating that, it's going to be a rocky ride for equities. A lot more allocation may be made for commodities, particularly crude. So from that sense, that's not good news, I would imagine, for the Indian markets or the retail investors watching you at the moment.
Well, it's an interesting point you're making about commodities, because let's put oil to one side for the moment. In general, as you know, there is an inverse relationship between dollar strength and commodity prices. Dollar goes up, commodity prices tend to go down. Oil is clearly running against that tendency at the moment. But I think it is going to be interesting to see what happens in broader commodity markets over the coming weeks. There was a very interesting note put out by a former colleague of mine, James McCormack, who now works for Fitch, earlier this week, postulating that if we continue to see a run of strengthening dollar, we are going to see some weakening of commodity markets generally, which is not good news for a lot of emerging markets, but clearly, again, does not have a really big impact on sentiment over India. What I'm suggesting overall is I think we're at a point where there is a lot of uncertainty around at the moment, both about emerging markets generally, global politics generally, and about where commodity prices are going to go to as well. Now, clearly, in those circumstances, there could quite easily be a negative impact on India because riskier assets or assets which are perceived as riskier are likely to suffer. But there could also be a positive impact in that India could be seen increasingly as a relatively safe haven in more volatile and uncertain times. And that's a sentiment with which I would tend to agree, given, of course, the right circumstances prevailing in India. And we're just coming up, I don't need to tell you guys this sitting there at the moment, we're just coming up to the monsoon season. Clearly, what sort of monsoon we get this year is going to have a significant impact on investor sentiment over India, as well as the politics and the general economic situation.
So coming back to this, you don't foresee a reallocation of the FII's portfolios, particularly when the US is also on a better trajectory, is making a recovery. You did point out that India is maybe a safer haven, but is it safe enough to continue with the kind of allocations that we've seen in the past?
Well, my personal view is yes, but you know, I'm not an equity strategist, so I would strongly suggest that you talk to somebody who's more expert in these things than I am. You know, I've always been reasonably bullish about India, as you know. I see no reason to turn bearish on India today, either for exogenous or for domestic reasons. Overall, I think it's a very good long-term story for investors. I don't see any need for investors to be alarmed or panicking about India right now. Overall, the trajectory going forward looks to me to be very positive indeed.
You know, Alastair, if you look at the consumption names over here, you think that's the key space to be? Domestic consumption, companies that will benefit from domestic growth irrespective of the crude price, that's the area to be in?
I certainly think that's one area which is well worth continuing to look at. But the difficulty, as I hear from many of my clients, is actually finding stocks which represent real value as investment prospects in India today. The stock market, as you guys know, is very well bought. If you can point out to me 5 or 6 stocks which represent really good value for money today, it would make me very happy indeed, and I'm sure it would make a lot of FIIs very happy if they could find those stocks. The big problem seems to me to be still that, to a certain extent, India is well invested, and finding value in the Indian stock market, real value, is a tough task for all but the most experienced and close watching India investors. Obviously, there are those who are finding value or believe they're finding value, but they're devoting a lot of time at the moment, I think, to finding that value. Very good market, very positive market.
Thank you so much, Alastair, for taking out time for us. Always good to get perspective from you.